Hey, traders. Happy Wednesday, everybody. Let's get a quick audio and video check in. Should be good to go. All right. Good morning, everybody. Good to see you all. We are just plowing through the week. Had a great long-term account growth session yesterday. Had a couple new alerts that we're keeping an eye on. So if you missed that session, it'll be in the Sector Secrets Mastery Trading Room archive. Check it out. We set up DRI, Darden Restaurants, and PM Philip Morris yesterday. Now remember, with those long-term account growth setups, I don't assume that they're going to trigger that day, right? These are setups that we like on the weekly time frame. So now we're going to wait for that price to be triggered. And the best thing to do if you want to participate in those long-term growth trade alerts is place an alert, a nickel, maybe a dime, on your TradingView platform, on your Thinkorswim platform, for a reminder that once we get close to that level, that's when we're going to be looking at the shares. That's when we're going to be looking at the leaps. And the whole idea behind this, and I'll share with you what we're looking at. And let's open this up here. Okay, the whole idea behind this is that we're going to put together a portfolio, a concentrated portfolio, not 100 different positions. These are high conviction, long-term holds that I'll be looking to take advantage of for the next handful of months to potentially years if it meets the criteria. So this is what it looks like right now. We've got 18 holdings. This does not include any leaps that traders might have chose to do instead of going with the shares. I like the shares. That's usually my preference. But again, choose your own adventure. Either works. Maybe a combination. Sometimes I'll do a little bit of shares, a little bit of leaps, and go from there. Let me get the notes here on the screen so everyone can see what we're looking at. And what I want to do here, let's move this over. All right. So what I want to do here is focus on a little bit of what's been going on here this morning. All right. What's been going on here this morning is pretty interesting when you think about the fact that there's still, and let me move these notes over. It's pretty interesting when you think about we're still having this Aspen conference that's going on, and there's been all sorts of interviews that have been happening from this conference. And one of them that I was watching this morning was Kashkari. And when you look at what Kashkari had to say, he's dovish. I mean, he's the head of the Minnesota Fed. He's really dovish. He's a dovish FOMC. He's generally leaning that way. And every FOMC member has one way or the other that they tend to lean. So, a dove talking dovishly is not a surprise, but he had some interesting takeaways. We're going to have to respond to that, meaning the data that's coming out, the slowing economy. I can see 2 rate cuts this year. His name is not Powell, so it's not as, Powell would never paint himself into a corner like that. But he did say, I can see 2 rate cuts this year. And, he basically said what we all know. Tariffs are the big unknown. Tariffs are the thing that are probably plaguing their decision-making process the most, right? Because we're still waiting on the pharma tariffs. We know that there's going to be a conversation about Apple today. We know that there's still semi tariffs. In the meantime, AMD reported and really got rocked. Let's go take a look at that chart. One of the many, 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 many reasons I do not play this binary scratch off lottery ticket game of guessing which way a stock's going to go with tariffs is because there can be significant moves way outside normal volatility during these events. We're going to open up around 166, which frankly isn't that far beyond the lower end of the daily price movement range. So our volatility study does do a pretty darn good job dealing with even these abnormal moves in the market when we have earnings coming out. But AMD is going to get rocked. I'll look at earnings in 2 ways. One, in the aftermath of earnings, I'll usually give the stock one full session to digest what happened, at least one. But I'm also thinking, does that move give us anything on the weekly time frame for our long-term account growth? And those are things I'll look at. Now, I'd prefer to look at semis as long-term or even for swings after we get the announcement, which is supposed to come out in about a week. It's not scheduled. We don't know exactly when it's going to come out, but we're pretty certain we're going to get it in the next week or so. That's all we know. And as long as that's a huge uncertainty looming over the semiconductors, from a swing trading perspective, I'm going to leave that alone. So AMD reported, Uber, Disney. And again, I'll go through the same process. Where is it now? And would I be interested in a pullback? I'm not really interested in Uber from the perspective of a long-term account growth holding. And the red candles on the daily here are going to keep me away anyways, because if I'm looking to be long, and I am, stocks are still very much in terms of indices in an uptrend. I'm not interested in things that are struggling to keep up with everything else. McDonald's also did report. We're sitting up at around 307, which is fine. It's above or at these highs that we see here. I'm not necessarily interested in McDonald's for a swing, although I wouldn't rule it out. It does have at least 5 green candles on the daily. But remember, we still have the long-term account growth holding in McDonald's from, 253 and change. So this is just nice progress, giving stocks the time to do what they tend to do over time, which is move higher. So this is a welcome earnings report for that longer term hold on McDonald's, where we're up over 50 points a share. So that's cool. All right. And then, of course, yes, we have NVIDIA earnings. Exactly. So there's so many reasons to leave semiconductors alone. The stock market is a great big place. Let's not, ever reduce it to the Mag 7 or be one of those traders that say, well, I just trade the S&P or I just trade the SPX. That's like going to the playground and just looking at the swings when there's monkey bars and seesaws and the merry-go-round and everything else. We're going to look at what has relative performance, whether that be intraday on the 5-minute for our day trading, or whether that be longer term for swings or even long-term account growth holds. There is an announcement from the president scheduled on Apple. I'm not necessarily interested in Apple. Look at the red candles. What an easy reminder just to stay away. Indicators should do what? They should distill so much information that me as a human, definitely not a cyborg, that me as a human could not possibly calculate on the fly with accuracy, right? So what our indicators do are the things we would do if, I was AI, right? If I had the ability to go through thousands of data points, great, but I don't. So what I do is I let the machine do it. I program it to look for things that I want. And when they are not bullish, these red candles are going to pop up, even these yellow, which is a neutral candle. If I've been printing green candles on Apple and I get a yellow, that's, I know when we see a yellow traffic light, people will joke and say, that just means speed up. No, it really means slow down, get ready to stop. And that's exactly the way I look at the candles of the top tier pro. It's like a traffic light. Green means go, yellow means slow down. Red for me, especially if I'm a bull, means stop, right? And I am a bull, gang. I'm looking for long call positions overnight because the overall equity markets are still very, very high. All right. So what else do we know we're dealing with? Well, let's start getting ready for the morning. The bell's going to ring in about 60 seconds. So let's just move everything over so I can focus on what I'm going to do for the next hour, which is focus on the day trades. And that means I'm going to be looking primarily at the 5-minute chart. Now, I'll keep the 1 hour visible. I'll even keep the daily visible, but not a priority because I don't really want to put on those swing trades until after 10:30. Let the clearing range set, let that clearing period go by. Let the initial balance, the first hour of the day, also go by. And then we'll see what kind of swings could be forming for us today. Speaking of swings, I know some of you grabbed Citi yesterday, which is fine. It was a little bit aggressive if you did, but it was a setup that we sent out. I did not get a fill because when I send out the alert, right, what do we put in the alert? The entire blueprint for the plan. What we're going to buy, exactly what price has to be touched before we buy it, And then we have our stop loss in that blueprint. We have our target in that blueprint. And one trade from the 2 alerts for the swings that we sent out, that we took yesterday, that I took yesterday, was GE. So I sent this one out before it triggered. I believe this one took about 20 minutes to reach our moderate trigger. So on GE, I was looking at buying, and I have the August 15 270 calls. We were looking to do it from either 270 or 269. So we had an aggro and a moderate trigger. Again, everyone has the choice as to which trigger they want to take. And if you're a little bit more risk appetite friendly, right? You're a little bit more risk tolerant. Sure, you can look at both triggers. I bought GE once it sunk down to 269. That's when I bought the 15 August 270 call. So again, remember the old saying, and it's an old and great saying, no trigger, no trade. Every trade has a setup. And that setup, that simple word implies really 3 things. Where am I going to get in? Where's my stop loss? And where is my target? And all of that has to be presented. Otherwise, it's not really an alert, is it? I'm just showing you, hey, I bought this, but nobody knows why or when or how or anything like that. So remember, we want to, transparency is that level of detail for every single alert. So GE's moving higher here this morning. I paid $4.85 or $485 per contract. Our first target is ideally 275. Our optional target, where if I am up 25% on premium paid, I have the option. The optional target is 273. And we're flirting with that now. We'll keep an eye on that. But I'll only think about the optional if I do it all. I typically do this. So for those of you wondering, okay, Rog, what do you do with an optional? So first of all, if it's not up 25%, it's not even an option for me. The second thing is I often tend to stick around with something like an optional if we have the, and I'm going to show you here, if we have the second test, right? If we have a second test. So that's something else to think about in terms of the overall movement, right? Okay, so if we get to 273, the first time I'll ask, is it up 25%? But I'll often take the second test because I really want that first target. I'm really looking for account growth. 275 is definitely something within reach because we're overall looking at a longer term overnight type position, okay? All right, so next up is, I'm going to let the first 5 to 10 minutes go by. Let's talk about a couple of things I noted on the morning. RTY was in a downtrend. It's definitely weak. It's no longer in a downtrend, but it's trying to reorganize into a 5-minute downtrend. So let's go take a look at that. That means that KRE is probably going to be weak as well. So if I want a bearish play, I'll focus on those bearish indices or the sectors within the indices and the stocks within them. Dow's also pretty weak on the open. We're not going to be surprised when we see these large candles in the opening 5 minutes. Why? Candles of unusual size are COUSs, candles that are typically larger than the average 5 that preceded it. This is not a surprise, right? I don't mean the direction. I mean the actual size of the candle, especially when we're having the opening bell. Volumes coming in terms of the spreads, they're starting to normalize. So we want to give everything about 5 or 10 minutes. We're not just rushing to fills right on the bell, but we're assessing what we like and what we don't like. All right. In terms of strength, there actually are right now 2 indices that are above the previous session close, the PSC. That's yesterday's close. Being above that is generally pretty bullish, right? You'll see more bullish sentiment focused on when we have could be a stock, could be an ETF, could be the index. When it's above the previous session close, the PSC, we know that we would rather be long as price is above it. So just a couple things, right? We know, right, having a candle of unusual size, COUS, is normal, perfectly normal for the open. And again, it's a candle that's about, it's usually going to be 1.5 to 2 times the size of the range of the previous 5 candles. So when you look at the last 5 candles on any chart, on these 5-minute charts, you'll see they had a certain price range. Usually on the open will be 1.5 to 2 times that. Not unusual at all. And usually by 10 minutes in, the second 5-minute candle, you can already see things are normalizing again. So a candle of unusual size, not unusual at all on the open. And again, another reason to just wait and see what the overall sentiment is. All right, let's take a look at the NASDAQ. Again, ES and Q are above their previous session close, so I'm largely bullish. I do like the NAS. Let me show you what I have in the notes here. One of the things I do like about the NAS for a potential setup, and again, I am going to always be looking to be long from lower and be short from higher. I'm looking to buy off support or sell off resistance. I'm not looking to buy the momentum at all. One thing I kind of like, and it was a little bit better before, is we have this previous session close at 23,992, which is right here. There's pretty good proximity to the aggro edge of the hourly price movement range. And this is that historical volatility study that I apply to all my charts. I run the data. Well, the bot runs the data using the algorithm that I created about 10 years ago, which is what is the typical amount of movement I'm going to see for this hour of the day? And where would then support and resistance be based on that historical probability? I don't love the fact that there's about 20 points between the previous session close and the upper edge of the hourly price movement range. I don't love that, but it could be something to work with here this morning. So this is support and this is support. And I would look for long calls or even a long NQ or MNQ position from that level. Ideally, if we get down there without a trend, I'll look for an oversold reading to confirm that this support is also oversold. Again, another way to confirm that it makes sense to be a buyer down at that level. All right, so what else do we have here? Let's go take a look at Bitcoin. Is still heavy. You know, gang, we haven't touched Bitcoin in a couple of weeks now. And the main reason for that is Bitcoin continues to struggle with that 119 level. That's not anything new. However, from an intraday perspective, yeah, Bitcoin could be interesting. So let me show you what I'd be looking for. What are the automated support and resistance levels already on my chart? I have a Darvis support level right down in here. Okay, cool. I have an indicator telling me we could be closing in on oversold, but we're not quite there yet. Now, if we can get down here at this price level with the reading, that's something maybe to consider for long Bitcoin or long IBIT as a day trade. I'm really not interested in swing trading. Oh, this is gold. Sorry. This is gold. Same idea. Here's gold. And that's what I'm looking for on gold. Let's go to Bitcoin since I've been saying that. Let's go to BTC. So I would be interested potentially in a long position in gold. But what about Bitcoin? Right? We're barely above the previous session close. And I don't have a Darvis. I don't have the hourly price movement range. I don't have a trend. So when we're scanning for day trading setups, what am I looking for? Just 3 setups, just 3. I'm looking at the trend. If there is, I'll have the wave, which is our mean reversion. If there's a Darvis that's formed, I'll consider that. And I'll consider the hourly price movement range. I'm only looking for those 3 things. And all 3 of these things that I'm looking for are automated with our tools. So I'm not having to do any kind of manual, analysis at all. Everything's automated. So whether we get to price or not, that's up to the symbol. But I know where I want to be doing something. I'm not sitting here wondering, well, could this be a buy? Or no, if we're hitting one of those 3 things, one of those 3 criteria are met, then there's something to do. A couple other things that I've had on my radar, and crude oil is another one. I don't know that crude's ready for prime time on our swings, but I am interested in this support level around $65 a barrel. It's actually $64.70 and change. I am interested in that for potentially oil stocks that are printing with green candles that are showing potential strength, because that could be really good support for crude, which would in turn be a good reason for oil stocks to move. It could be oil stocks within energy, XLE, oil services, OIH, or even oil and gas explorers. Okay. So those are things that I'm absolutely looking at going forward. All right. So in terms of, well, let me just take a look at Exxon, for example. If crude's moving higher, Exxon, Chevron, ConocoPhillips, the XLE ideally are moving, much like I would look at gold miners with gold, right? We can look at oil stocks with oil. And that's a quick look at basically what we're kicking off the morning with. I'm not going to touch semis. I'm not going to touch Apple today. We want to find stocks that are moving with the broader averages. And I'm going to be focusing mostly on stocks and sectors that are weighted within the NASDAQ and the S&P, preferably to the long side, as long as they can maintain support above that previous session close. Couple data things to remind ourselves about today. We did not have any hot zones before the bell. Crude oil inventories were at 10:30. The 10-year bond auction is at 1:01 p.m. Eastern, and we have two FOMC speakers this afternoon, Collins and Cook. I guess they're doing it alphabetically today. So we'll be keeping an eye on that for potential volatility. And that is what our morning is looking like right now. All right. Any questions?